What's up, guys? Your reporter Quick Stocks is back. As always, remember to hit those thumbs to recharge my dopamine, and we will get right into your quick stock analysis of Microsoft, ticker symbol MSFT, trading for $180 a share as of May 5th, 2020, equating to an absolutely insane market cap of $1.3 trillion and a PE or price per earnings ratio of 30. Currently, we have 34 shares of Microsoft, equating to $6,000 or about 3% of our total long-term portfolio. So, what's the move? Should we open the window on Microsoft or cash out before the blue screen of death? This is your quick stock analysis. With an industry title such as software development, computer hardware, consumer electronics, social networking service, cloud computing, video game, internet, corporate venture capital, it's going to be impossible for me to do a complete analysis of Microsoft. But to keep it manageable, we will quickly cover the three sections that Microsoft divides its reporting segments into. And here's a pie chart if you want to see the percentage of revenue each section brought in as of 2019. First, we have productivity and business processes, which includes Office 360, which has well over 200 million monthly active users, Skype, which is used by 100 million monthly active users, Outlook, which has well over 400 million active users, OneDrive, Microsoft Dynamics Business Solutions, which has well over 100,000 monthly active users, and LinkedIn with more than 260 million monthly active users. It's insane to think that this is just a subsection of Microsoft's portfolio. Anyways, let's move on to Microsoft's second section, Intelligent Cloud, which encompasses the company's server products, cloud services, and enterprise service offerings. Of course, this also includes Microsoft Azure, which has been on an absolute tear, taking in 18% of the total cloud computing market share in 2019, reporting a year-over-year growth of around 70%. With partnerships with some big boys such as Costco, Walmart, AT&T, and Coca-Cola, Microsoft is poised to take even more market share from one of our other quick stock companies, Amazon, specifically their cloud service AWS. I would expect Microsoft Azure to continue its strong growth for decades to come, especially the next few quarters as quarantine conditions push more businesses to adapt to new technology faster than they may have before the quarantine, which can also be said for many aspects of Microsoft's company. However, with the global cloud computing market share expected to grow around 20% a year, obviously as an investor we shouldn't expect Microsoft Azure to continue 60% growth forever. Realistically, it could only be for a few more years. And finally, the last segment that Microsoft divides its revenue into is personal computing, which includes Windows operating, Surface, Xbox video game platform, and Bing, with the video game market expected to reach $51 billion by 2027, and with the new Xbox scheduled to launch this year, it is yet another catalyst for Microsoft, especially considering Microsoft owns rights to titles such as Minecraft, Fallout, Halo, and Gears of War, just to name a few. And of course, in many people's mind, Windows is the only option. Of course, some may prefer alternatives such as Linux or Chrome OS, but for the average user, Windows has it on lock. I'd also like to note, Microsoft announced due to the quarantine, Microsoft Teams usage, which is a chat-based collaboration tool, has seen over 44 million daily active users. Finally, Microsoft acquired GitHub in 2018 for $7.5 billion. GitHub provides hosting for software development version control. Since 2012, GitHub has grown its user base at a compound annual rate of 50%. GitHub's total addressable market will be worth around $6 billion by fiscal 2025. With all of this in mind, it's clear that Microsoft is a diverse business that allows investors to gain exposure to a wide array of compelling technology trends in the PC market, secular growth in gaming, the booming cloud industry, and ongoing need for productivity software. As always, our most important metric, Microsoft's net income for 2019 was $39 billion, which was a 136% increase from 2018, which for a company the size of Microsoft is one impressive feat. With Microsoft having $39 billion in net income in fiscal 2019, let's see if we can justify the insane market cap of nearly $1.4 trillion. Of course, Microsoft does not separate individual assets, and with an ever-changing landscape, it's going to be hard to pinpoint Microsoft's total addressable market. However, what's not as murky is Microsoft has a solid market share in some of the fastest growing markets such as cloud, business software, gaming, and social media, with these markets expected to grow around 10 to 20% for decades to come, let alone the market share Microsoft can take from its competitors. I have no doubt Microsoft will continue to well outperform the S&P 500. And with one of the best balance sheets in the world, honestly, as an investor, potentially your biggest risk is government intervention, which, as you can tell by my portfolio, I am not overly concerned with. So the moment of truth, is Microsoft a buy? Well, the answer depends on the investor. For us here at Quick Stocks, with nearly $6,000 already invested in Microsoft and share prices once again making its way back to all-time highs, I can't justify picking up more shares in Microsoft at their current levels. However, with all of the volatility in the market, I don't think anyone would be surprised to see another massive dip, in which case I will be actively picking up more shares in Microsoft. I'll be looking to add them to my Roth IRA, which obviously I am extremely selective on the companies that I deem worthy of such high honors. Anyways guys, this was your reporter Quick Stocks. As always, the best investment you can make is hitting that subscribe button to go long on Quick Stocks. At 100 subscribers, subscribe now and plan to retire early. I'll catch you guys in the next one.